Welcome back to Lem's Cryptoverse. So today we're just going to have a quick vid and talk about what the heck is going on with Bitcoin. Things look really good. So let's get started. So I'm going to talk really fast and minimize myself so we could just go over what happened because it's unbelievable. The reason why it's unbelievable is because we've had three banks, beginning with the letter S, that have gotten into trouble. We've got SVB slash Silicon Valley Bank, and then Silvergate, and then Signature Bank. All three banks shut down on 3 consecutive days. That's Thursday, Friday, and by Monday morning, Signature Bank was closed. So we don't know who's next. So these are desperate times. And the Federal Reserve and the US government are doing desperate measures to save these banks as well as the depositors. So with all that going on, everyone's trying to figure out what's going on with the stock market. Well, today the market was down a little, but it was up sharply early in the day. But Friday it was down. But bonds know where they're going. This is Treasury bonds. Bonds have been up tremendously in terms of prices, and the interest rates on 2-year notes fell the most in history, or one of the most in history. Actually, the one-day loss, I would guess, is the most in history, and the decline. I'm saying loss, but I mean decline interest rates on the 2-year Treasury. We only had them a handful of times, maybe 4 times decline. That's October 87, September 11, 2008, times like that, the Lehman crisis. That's how sharp these declines have gotten. And as you know, long duration assets do well when rates decline, but I was shocked by how well Bitcoin did. Bitcoin, as you could see here in the heat map, is up 9.6% only one day. And everything else is up too. It's basically a sea of green, mostly green. We could change the number of coins here to like 100 and see what happens. I would say it's mostly green, as you can see. So let's click on Bitcoin and we can actually get a stock chart. They have a Bitcoin technical score. I don't know what that is, and I don't trust it. I don't know if you do. But let's look at the stock chart from TradingView that they show you here. Now, if you look at this, let's go back to 6 months. Actually, 1 year is better. If you look at this, you can see that we went up sharply. But to me, the move up in January and the move up in the last 2 days, 3 days, has not been healthy. It almost looks like it's manipulated. It does not look good. That's the first thing I want to say. The second thing I want to say, there's a huge amount of pressure at exactly the level we are. And then the second amount of pressure is around 28, 29,000. So this is resistance. When I say pressure, I mean selling pressure because there's resistance at this level. So this does not look good. So I don't know how we could go up much further from here. I think it's going to be very difficult. But maybe we could go up a little, because if you look at other indicators, like I like to look at confluence, meaning looking at other markets. If you look at the CNN Fear Greed Index, we're at extreme fear. And usually when we're at extreme fear, which is this lower number here, but we're at 20. So when it's that low, it means that stocks can rally. And in turn, if stocks rally, because this is a contrarian indicator, if stocks rally, so can Bitcoin. But oddly, we're in greed territory because Bitcoin went up a lot. Crypto in general went up a lot, right? Because crypto's joined at the hip at Bitcoin, basically. So crypto's joined to the hip with Bitcoin, and Bitcoin is joined to the hip with the treasury rates, basically. But what's odd is usually these two move the same. Usually the Fear Greed Index on Bitcoin moves the same as this one. But this week, they're moving in opposite ways. One's hitting extreme, you can see up here, extreme fear, and the other one is hitting greed. So very strange. So when I see something contradicting each other, things that don't make sense like this, I get even more bearish. But I think, and I'm going to show you why, I think that Bitcoin and even stocks can go up because there is a potential that rates will continue declining. For example, the Fed is raising rates. It's having its meeting in 8 days. And during that time period, the probability is for a 25 basis point rate hike. It's a 76% probability. But if you go back, and let me just move myself. If you went back to only a few days ago, there's a high probability of 50 basis point rate. But because of all the bank runs and potential bank shutdowns, because of those issues with banks, investors now think that the Fed's only going to raise 25 basis points. Or maybe, if you look at the left side here, maybe they won't do anything. So I think what's going to be pivotal to them raising rates by 50 basis points or 25 basis points is this. This is the United States inflation rate as measured by the CPI, overall CPI year over year. We were at 6.4%, down dramatically from just a few months ago and down from the peak right here at 9.1% in May and June of 2022. And for next month, they're looking for 6%. That's what's coming out Tuesday. And the previous, as I said, the previous month was 6.4, and that's right here. So they're looking for another decline to 6%. I think it's possible. Why? Because TrueInflation, which I like to look at, this index is at 4.56%. It's still trending down. So I think that's everything I want to talk to you about. So what I'm trying to say is I think we've got a chance of doing well in terms of CPI report. So even though the labor report was extremely strong, the last two labor reports, there's still a chance the Fed won't raise rates 50 basis points or even 25 basis points because the CPI might be good. And remember, there's a lot of systemic worries. There's worries that there's going to be systemic, also called contagion risk, meaning that this bank risk is going to spread out into other sectors of the economy. Actually, it already is. I mean, it started with VCs/tech and crypto, and it's already spreading. Stable coins. So there is some truth to that. Well, thank you all for listening. And if you like us, please remember to subscribe and hit the like buttons below.